Bitcoin breaks $94,000 as Cantor Fitzgerald, Tether, SoftBank, and Bitfinex back $3.6 billion. Crypto acquisition giant 21 Capital. Bitcoin continued its upward momentum on Wednesday, briefly touching a high of $94,535 before settling just above $93,000 on Thursday morning. The bullish sentiment is being fueled not only by price action, but also by a wave of institutional developments shaking up the digital asset space. Chief among them, the announcement of 21 Capital, a new $3.6 billion Bitcoin acquisition company backed by Cantor Fitzgerald, Tether, Bitfinex, and SoftBank. The new entity is being led by Brandon Lutnick, who recently assumed the role of chair at Cantor Fitzgerald. Brandon is the son of Howard Lutnick, current U.S. Commerce Secretary who stepped down from the firm to join the Trump administration. Under Brandon's leadership, Cantor is making an aggressive foray into the cryptocurrency space, one that could rival the Bitcoin-heavy strategy of companies like Strategy, MSTR, formerly MicroStrategy. 21 Capital is structured as a special purpose acquisition company, SPAC, and will be formed via a merger with Cantor Equity Partners, an existing SPAC sponsored by an affiliate of Cantor Fitzgerald. Once the combination is finalized, Tether and Bitfinex will become majority stakeholders, while SoftBank will hold a significant minority share, according to the company's joint press release. Tether and Bitfinex are sister firms under the umbrella of iFinex Inc., a crypto conglomerate with long-standing influence in global digital markets. Tether is the issuer of USDT, the world's largest and most widely used stablecoin, with a market cap surpassing $110 billion. Bitfinex, meanwhile, is a crypto exchange headquartered in the British Virgin Islands and known for its deep liquidity, advanced trading tools, and controversial history. What sets 21 Capital apart is the scale and strategy. The company plans to raise an additional $585 million in capital at close, $385 million through convertible senior notes, and another $200 million via PIPE, financing private investment in public equity. That's expected to net $540 million in usable funds, which the firm says it will use to acquire more Bitcoin and support general corporate operations. 21 aims to launch with 42,000 plus BTC on its balance sheet, instantly placing it among the top corporate Bitcoin holders globally, behind only MicroStrategy and Tether itself. This bold strategy positions the firm not only as a long-term Bitcoin treasury holder, but also as a powerful player in shaping market sentiment and on-chain liquidity. Adding further credibility to the venture is the appointment of Jack Mallers as CEO. Mallers is best known as the founder and CEO of Strike, a fintech platform built on the Bitcoin Lightning Network that aims to revolutionize global remittances and digital payments. His leadership adds a technical edge and a strong ideological foundation, especially among Bitcoin purists and the open source community. The deal also includes an unusual yet strategic arrangement. Tether has agreed to purchase Bitcoin equivalent to the combined value of the PIPE and senior note investments within 10 business days. 21 will then use the proceeds of the offering to purchase that Bitcoin from Tether, essentially seeding its treasury with assets from a trusted partner with deep liquidity. Although the transaction does not yet have an official closing date, Cantor Equity Partners shares will continue trading under the NASDAQ ticker CEP. Upon completion of the deal, 21 Capital will begin trading under the new ticker XXI, a nod to Bitcoin's 21 million hard cap. Bitcoin, Ethereum, and ETF market momentum. The launch of 21 Capital adds fuel to a crypto market that's already heating up again. After a choppy start to 2025, Bitcoin has risen about 7% over the past month, driven by renewed investor optimism, increased ETF flows, and a more accommodative geopolitical backdrop. Ethereum, ETH, also participated in Wednesday's rally, briefly topping $1,800 before retracing to around $1,770 on Thursday. ETH has clawed back some losses from earlier this year, but remains down around 45% in 2025. The lack of a spot Ethereum ETF approval and ongoing regulatory ambiguity around ETF's classification as a commodity or security continue to weigh on the asset. Meanwhile, spot Bitcoin ETFs are quietly emerging as one of the most powerful drivers of BTC price action. The group collectively brought in $912.7 million in net inflows on Tuesday, according to data from Farsight Investors. That brings total inflows since January 2024 to $36.77 billion, a staggering figure that reflects how deeply embedded Bitcoin is becoming in institutional portfolios. Leading Tuesday's ETF inflow surge was the ARK21 shares Bitcoin ETF, ARKB, with $267.1 million, followed closely by the Fidelity Wise Origin Bitcoin Fund, a FBTC, at $253.8 million. The